Yo, what's going on, ladies and gentlemen? Good evening. I hope you're all having a great weekend. So let's get straight to it, guys. It's the Sunday night update. We've had the new monthly candle form. Word on the street is Bitcoin is just going to go even lower. Money is going in and out of exchanges. The bigger players are seeking liquidity. That's what happens when they start depositing into exchanges, ladies and gentlemen. But tonight we're going to go and focus onto something to help you try and make something from a market that is dropping. How do you short in trading? Now, there's two ways that you can trade. You can trade when you favor price to the upside, and that is going long. And you can also trade short when price is dropping to the downside. This is why people always think how do you make money in a falling market? Which goes to the conventional wisdom that is being put out to retail traders that come to the game of trading. How can you make money when price is going down? Surely you only make money when things are going up, because we've had it installed in our mind that we base every financial decision based on value. So if I buy it at $10, it means that if it goes to $20, it's increased in value. I make a profit. Well, why can't I sell it at $10 and then buy it back again at $1? You see, when you short an asset, what you are doing is this. Short selling involves borrowing a security and selling it on the open market. You then purchase it later at a lower price, pocketing the difference after repaying the initial loan. For example, let's say a stock is trading at $50 a share, you borrow 100 shares and you sell them for $5,000. All right? Then when it comes to you getting rid of that, what do? You buy it back, which is called a buy to cover. So rather than going too deeply into the idea of short selling, okay? If you are new to the idea of short selling or new to the idea of trading full stop, put it in the comment section so that I understand my audience. I don't know how many of you are familiar or understand what short selling is. How many of you have the belief that price can only go up? You're only favoring purchases, just buys, and buys. And you wait when times are dropping, you wait for price to come back up again. Okay? Because that's what happens. You go to search for a stock, you go to search for Bitcoin, you go to search for Ethereum, ADA. You look at the price and you say, I'm actually favoring lower prices, I'm going to wait. So in that sentence, you are implying that it's going to go down lower. Why can't we profit from that? All you need to do is go find yourself an exchange that will allow you to do so. Some of the common ones, Bybit, Binance, Femex, pretty much every exchange in cryptocurrency allows you to do that. Near enough every exchange in the US will allow you to short stocks. Now, short selling hasn't been around too long. It has been around back in the days of trading, but it's a new thing when it comes to the idea of trading itself. Everyone was used to the idea of just buying and buying. But short selling does give you opportunities. So here's a little bit of a strategy that you can apply when you are short selling, all right? Firstly, if we take it to Bitcoin itself, time frame is very important when you come to actually short sell, all right? But more importantly, you need to understand what's going on in the industry. Whether you're trading Forex, whether you're trading commodities, stocks, even cryptocurrency. What's going on? Now, you've got to remember, cryptocurrency doesn't really have that impression. In other words, if someone says something about cryptocurrency, Bitcoin goes up. And if someone says something negative about cryptocurrency, Bitcoin goes down. Now, that was the best part of last year when we had all of that madness. Now you're hearing people talking so much about cryptocurrency that there's nothing that no one could say about crypto that they wouldn't anticipate anyway. See, now cryptocurrency's become mainstream. It's like if someone said anything about dollar yen or someone said anything about euro, no one would really take an interest to it. It would have to be someone pretty phenomenal. And for them to come out and openly say, I favor dollar to go to X amount in the near future. But what I'm trying to say to you is you want to really understand what's going on economically in terms of macros, okay? We've had a plethora of macro news announcements coming out in relation to the US economy. The US economy is going to dictate what's going on around the world. Why? Because everyone puts their assets, puts their interest into the US dollar. All right? Everyone goes to the US government. They go to the Fed. They dump all their money in the yields because they want to guarantee themselves a decent return with some minimal risk, especially when times are like this. You've only got to look at commodities, ladies and gentlemen. What do you buy oil in? Dollars. What do you buy coffee in? Dollars. Orange juice, dollars. Everything is done in dollars. Bitcoin is brought in dollars. Okay? So once you understand what's going on economically, I mean, let's face it, ladies and gentlemen, all right? We have got inflation, right? We've got the idea of recession. We've got guys talking about the S&P. Now, the S&P, remember, guys, if you are new, the Standard & Poor takes the top 500 companies that are based in the US, all right, and have a certain amount of shares that trade over a period of time in every day. So on average, we're talking anything from 10,000 shares a day all the way through to millions of dollars worth of shares every single day, all right? And it takes the top 500 companies that are listed on the US stock market. Okay. Now, why is this important to Bitcoin? Because this is where the money flow comes from. This is where we're going to understand if people are going to speculate in cryptocurrency. Remember, I said it before, cryptocurrency itself is an exotic asset. All right. We already know that institutional traders and hedge fund managers are sort of offering the idea to their clients that you can invest in cryptocurrency. And even if they do invest in cryptocurrency, they're using a very small amount of their portfolio exposure. Okay. The only true people that are getting the hit hard of Bitcoin trading at such a low price, okay, are your whales. But the problem is when we track whales' behavior, we will never know fully if the whale is selling in these zones. We will never know because there's so many transactions. And quite frankly, ladies and gentlemen, in my opinion, I believe when it comes to Bitcoin being transferred into cold wallets, that makes sense. All right? But we don't know if the Bitcoin that is being transferred into cold wallets is profit. Just because wallets are receiving a big sum of Bitcoin into cold wallets, we make the assumption that that means they favor to hold onto their Bitcoin so that the supply-demand concept starts to kick in with Bitcoin. Nah, ladies and gentlemen. They're probably going to do exactly what all of us do. We make a bit of money in cryptocurrency, chuck it into a cold wallet because you favor the longer term. It's when they put their money into the exchanges when they're hunting for liquidity. That's what we need to pay attention to. Now, of course, we do have things like the Glassnode itself, ladies and gentlemen, that is going to show us that information. I'm just going to do a quick update on where we are in terms of capitulation. So we zoom into this point, and capitulation seems to be continuing lower. All right. We have probably spent the best part of, June the 13th, going now into the 3rd of July. We've had quite a few days worth of capitulation in the chart. Could we get any more capitulation in Bitcoin? That's the next question, which leads me over to the chart itself. Where is Bitcoin likely to end up? And this is going to be great for anyone that may potentially want to look to try and short Bitcoin. Okay? Now, when you're shorting, the thing that you need to be aware of, all right, not just the macros, you want to pay attention to the way price is moving. Now, it's all based on the time frame that you are assuming, okay? Just because we believe everything is coming down, we don't just blindly go into a trade and say, you know what, happy days, let's roll out and just go short. No, because behind every attempt to the downside, they have to mark price up because Mr. Market Maker works like that. He works to seek liquidity to the upside to get people to believe that now price is rising up, okay? Whilst he's doing that, he's going short from these points. You see, he doesn't go short when price is at its lowest point. He goes short from the highest point possible because he knows where he's going to send it. Remember, Mr. Market Maker is the person that makes sure that you as the retail trader gets your liquidity fill. So here's the retail trader. You've seen me do this before. This is Binance. And this is Mr. Market Maker, all right? Little Steve right here. He wants to buy $100 worth of Bitcoin. He pings that order over to Binance. Binance then automatically sends that order over to the market maker to match the liquidity that this trader here, who's using 100x leverage, all right, wants to buy $100 worth of Bitcoin. So Binance sends that transaction over to Mr. Market Maker. Then Mr. Market Maker follows through back into Binance. Binance gives the retail trader that transaction. The trader now has 100x position in Bitcoin, $100 worth, favoring higher prices. So he would be in a long, okay? Likewise, the same for shorting. If the same retail trader wants to short Bitcoin, he's going to open a trade at 100x for $100. Binance is going to receive the order, and then they're going to send it over to Mr. Market Maker, and Mr. Market Maker will send that order back to the retail trader, and the retail trader will have himself 100x position in Bitcoin, $100 short, and he favors lower prices. The thing you've got to remember about trading itself is when you go long or short, the market maker himself is matching your liquidity. That's why you use Binance. That's why you use Bybit. All right? Now, when your position goes up $100 in value, you're using Mr. Market Maker's liquidity. Why? Because where do you think you get your profit from? That's the first thing you really want to ask yourself. Where do you think profit comes from in terms of your position? You think Binance are going to give you that money? No. It comes from the liquidity provider who takes the risk of giving you that liquidity to match your order so that you are in the fair exchange, okay? And he waits to see how long it's going to take for you to pay yourself. That's why I'm always saying to you guys, pay yourselves, because no profit in the chart is guaranteed, okay? You may see people showing screenshots of their positions in terms of profit, but it ain't profit till it's closed. It's just floating money, imaginary money. Until it's banked, it ain't nothing. It's just, in other words, you're just advertising to Mr. Market Maker, okay, that you are in that position and in that mindset that you ain't going to close this bad boy because you've got a ton of money there and you think it's going to keep on going up. At any moment of interest, Mr. Market Maker can reverse price. No different to what he did right here with the short sellers. You can see how price takes the drop to the downside. Mr. Market Maker does a good job of inducing traders to believe price is going lower. That solidification happens. Okay, and then it marks down aggressively and then he comes straight back up and sharply takes out the range. Again, ladies and gentlemen, that's why it's so important that you pay yourselves. So when you try and short, guys, what you're looking for is you're looking for price to move away from moving averages. That's what you're looking for. That's one of the simplest strategies that you could apply. Why? Because that would give you this volatility in the chart to move lower. All right? Now, something you've got to be aware of. This structure right here is a common thing. So when price drops down, price reverses back up, then it comes back down, reverses back up, comes back down, reverses back up. Okay? It's at the lowest point of the range right here where you need to make a decision. Why? Because from that point, it would be on the assumption that you would have caught the most volatile part of the trend at that point in time. So in other words, look at this zone here. See how it aggressively comes down from the 50 EMA, which is this purple line? Then it starts to stall in this area, then finds its feet and comes straight back into the range. Now, had you have not paid yourself, you would have been in a situation to close your short at a loss. Why? Because you would have then said to yourself, well, what if it continues up from here? I'm going to change direction. And then price reverses and goes down lower. You see, in this zone right here, ladies and gentlemen, the retail trader is being manipulated. Why? Because the guy that believes that it's going to go lower, he gets pressurized and he gets himself to move his margins and commit more and more liquidity just to save the position. So then the retail trader now is behaving irrationally. Mr. Market Maker can be as irrational as he wants because he's got the liquidity to do so. So if you do see a move to the downside and you're in a short, pay yourself. Why? Because if you then see it come back up, you'll look at that and say, ha, I got out of that short. You know it, man. I banked myself some profit. But you are leaving money on the table. Why? Because that same retrace back up could then start another move to the downside. Had you not closed that trade, you would have been wishing that whilst it's moving up, you would be hopeful that it's going to continue down lower. Do you see what I'm saying? You're better off just taking the trade itself, ride the move to the downside, pay yourself, and if price holds at this point, happy days. And I can tell you this, it will always retrace back into the fray. When I say fray, back into the 50 EMA, back into the moving averages. And this is what you've got to be very cautious of. Okay? People that see shorts and they believe that it's going to continue down lower and lower and lower, cool. You've got to take some money off the table. Now, if you do have a longer term play in sight, then Bitcoin may need to do a bit more of a bigger move. Now, for example, say you have been going short from this point right here, 21,864, and Bitcoin drops even lower, down to here. Any retrace back up maybe into this zone right here, ladies and gentlemen, okay? You would then say to yourself, I'm either going to take some profits from this move here, or I'm going to add to my position because I believe they're going to continue with this move to the downside. Which leads me on to the next discussion, ladies and gentlemen. What can we expect from Bitcoin going into tomorrow, given that we do have Independence Day for the guys in the US? Mad love and respect to anyone from the US. Please put in the comments down below where you are, and happy Independence Day to all you beautiful people. Now listen, if Bitcoin does the following, then we are going to have ourselves a very interesting run. You see, Bitcoin can formulate this pattern right here and start trading away from this zone and move up. But that doesn't mean that it's now time to start picking up Bitcoin. Because what they could do is they could actually initiate a move back up from this zone, take some of the liquidity in these areas, and then just simply come back down again. We have been selling off non-stop, ladies and gentlemen. We've already had ourselves a little bit of a recovery rally right here, and then they followed that all the way back down again. This zone right here, ladies and gentlemen, is Bitcoin's lifeline. Because what we would like to see is we would like to see Bitcoin actually consolidate in this area. We would want to see Bitcoin staying within this zone right here. Now, you're going to go and do your due diligence and go out and find out what could give you a reason to believe Bitcoin is going to go lower. The best thing that you can do, guys, is to understand the relationship to how often price moves up against how often and how aggressively it moves down. And do the same with the longs. If you think that they are aggressively trying to move price higher, then we would expect price to start moving up. If they are aggressively hitting it lower, then you would naturally anticipate Bitcoin to move down lower. Given that the start of this monthly candle, ladies and gentlemen, hasn't had a great attempt so far, we are sort of in good books so far, so good. We've already had a rejection of the 50E of the actual vector candle point right here. Price would dictate that at some point we would expect Bitcoin to come up into this candle, but it's going to be a little while for Bitcoin to get back up to 32, given with the way things are going. Okay? So what we need to be aware of is the next points in the chart that they could actually run towards based on how well this candle performs going into the next 5 hours where Bitcoin weekly candle, new weekly candle will situate. Okay? We have ourselves these zones right here. Get them marked off because these are very important zones in the chart. We're going to take last week's, a couple of weeks ago's low right there. Okay, so that's 17,690. Then go down to the bottom of this vector candle, mark it off on your chart, 15,904. And the next zone will take us towards 13,748. Why are these zones important? Because if you're trading the hybrid system and you are proficient in the system itself, you'll be expecting at some point that they may be moving price down here. And if that doesn't happen, you will then be expecting a structure to develop in this area. So patience is one of those things that needs to be applied in when it comes to this sort of scenario. If you're a swing trader, this is what you'd be probably looking for. If you're a day trader, it's really irrelevant. Why? Because as a day trader, if price is getting close towards that point and you can see it's actually holding above it, you would then be of the impression that it's going to try and move towards that zone. So you'll start running shorts and price is going to make its way towards that point if you caught it in line with the narrative to move it down lower. That's the problem with trading, ladies and gentlemen. We're going to be dealing with the uncertainty of everything. And the sooner you accept the idea of uncertainty, ladies and gentlemen, that is when you are going to trade carefree. How can you be scared of something that you don't know exists? You know what they say. Fear is false evidence appearing real. If you think it's going to go lower and you are reluctant to take your trade because you then think it's not going to go lower, well, you don't know if it's going to go higher or lower. All you can run with is development of momentum. All you can go with is the time it takes for them to get to that point. So if you're in a trade and you're favoring lower prices and you actually haven't been sitting or seeing price moving down progressively, then you could be in an accumulation zone. There's a saying that they have in the UK. If you're stuck on the motorway, right? If the lorries or the trucks are at a standstill, you know traffic is serious. But if the lorries and the trucks are trailing very slowly and they're moving, then traffic ain't so bad. That's how you can gauge how long you're pretty much going to be in traffic for. If the lorries are stood still and the trucks ain't moving, you know you are chilling in traffic on the motorway. But as long as they keep moving, then you are going to at least sit for a bit of traffic, but not too long. The same principle applies in trading, ladies and gentlemen. If you're in a trade and you can see price is just doing this all the time and you're favoring to go higher or lower, okay? Based on the narrative that you are favoring, you would then be paying attention to this zone and saying to yourself, okay, if I'm favoring longs and I can see price is making attempts down lower and lower, but yet it's not actually breaking lower, I need to start diving into the whole and half number concept and say, okay, so where do you believe they are building longs at lower prices? So then you mark it off and say, okay, here, hypothetically, here is the 11,000 zone right here, okay? Are they building longs or are they building shorts? How often are they hitting the lows of below 11,000 and coming straight back up? In other words, how often are they trying to spike interest to make people go short and quickly bring it back up? The more they spike a zone to the downside and not follow through and break down, the more of an indication that they're going to try and come back up at speed to shake out the guys who have tried to run shorts in here and take their liquidation points. You want to see something similar to that? Look on the 1 hour time frame and zoom in and look at what had happened on Friday night, if knowledge serves me correctly, in the Tokyo session. Look at what they've done. How often were you seeing them consolidating and trapping the traders? So look at this zone right here. They were holding, and guys were getting in long, and then they pulled back ever so slightly. The guys who went long in this area were using this as a support point. You know, the old saying, old support becomes new resistance becomes old support, and what have you, whatever that madness is, okay? Traders were using these lines as support. So that's why they were holding positions, all right? And then they were putting their stop losses way below here in anticipation that if it does spike it, they ain't going to get stopped out. Well, guess what? They didn't get stopped out. They got liquidated and wiped out. Then they decided that they're going to change direction and run for shorts. Then Mr. Market Maker consolidates yet again, makes them believe that they're going to go lower and then reverses back up. Yeah? The guys who were in the shorts here, not paying themselves. And then they ended up paying the price. So going into tonight, ladies and gentlemen, just be aware. The US session is closed tomorrow. So it's just the UK session and Europe itself. What could they do? Well, we know one thing. We know that when the US session comes back to the drawing board, Tuesday at 2 p.m. UK time GMT, where we will be going live again to bring the fire. So if you haven't subscribed, be sure to like and subscribe so you can get the notification of when we actually welcome the start of the New York session, because tomorrow they're having a day off. All right? We may get some very interesting volatile moves now until tomorrow evening going into the Asian session. In my opinion, ladies and gentlemen, you want to wait until all the markets are operating so that you can improve the chances of placing trades that are looking to give you a higher probability that the outcome is going to be in your favor. Okay? So, ladies and gentlemen, tonight we are going to welcome the Asian session. Remember, Sydney at 10 p.m. GMT UK time is the dead gap time. Markets finding its feet. We are expecting some volatility to happen. You can see the psychological ranges themselves. They are pretty wide. And we've had this big stopping volume candle happening right here with this wick that is not looking favorable. Not seeing vectors appearing, spiking up here. Ask yourself the question. Here's a bit of an exercise for you. Mark off the key whole and half numbers. What's the whole number in this zone? The 19K zone right there. Where's the next zone? 19,500. All the way up here. Cool. What do you think they're doing? Funny how the psychological high and the psychological low are sort of in between these ranges. They're setting their spreads now. We are waiting for an indication they're going to break away from the psychological ranges, because the wider the psychological ranges, all right, the more manipulation that they have had in price. So we're still waiting for it to find its feet. Because what we're looking for is we're looking for price to break away from the psychological high, retrace back into it to confirm its move, and then look to move higher. Likewise, if we do see the break below the psychological low, we are looking for a retrace back into the psychological low with the intention that they're going to come down lower. What's going to happen at each of these points? The 50 EMA in principle will be edging upwards. So as it turns upwards, this is where the test would be. And then as the 50 EMA edges downwards, this is where the test would be on the 50 EMA. Those are your confluences. There ain't no magic ball here right now, guys. There ain't no crystal ball. There ain't no prophecy in the markets. All you're doing is you're trying to capture the moment that momentum comes into the charts. Ladies and gentlemen, mad love and respect, and I will check in with you all tomorrow. Take care of yourself, pattern watchers. Mad love. Peace.